Hey, it's Elaine. This is episode 9 of the Red Pilled Orange Pill Investor. And generally, when I started selling covered calls, I was just a premium hunter. But I'll go over why I am not currently trading HUT, even though there is some absolutely monster premium that you can get off of this. So you buy 100 shares for $11.55. You can immediately sell a covered call at the money if you want to be as greedy as possible. And this is only 3 days of premium that you're going to get. So you could have done this last Friday, it probably would have been double. So 1% of 12 is 12 cents. So this is over 5% ROI just in 1 week, just in 3 days actually. But I'm just scared that this spiked too recently. Like, I don't want to buy this at $11.55 and then sell covered calls all the way down to $4 or $5 a share. So I will be watching this. I did trade it some, and then after it spiked, just kind of gave it a rest. And but it's definitely enticing. I mean, you can sell this at the money and then buy 5 more shares of it. You can even give it a little bit of breathing room in case it does bounce back up. 12.5, 13. Buy 4 shares, 3 shares. But for now, and like I mentioned before, the bid-ask spread is still a little too wide, even though there's a ton of open interest and decent volume. I'm still just not thrilled about the bid-ask spread. I mean, you can really get screwed, especially when you're collecting small. This is a large amount of premium compared to the price, but it's still a small amount of premium compared to something like Tesla or something really expensive like MicroStrategy. So if you end up having to come down, you're thinking, oh, I'm going to sell it for 70, and you really can't get filled until you get to 60, then I mean that's big time. That's over 10% less than what you thought you were going to get. So liquidity is a huge factor when you're deciding what to trade. And let's just take a look at the other ones that I trade. Take a look at their liquidity. So tons more volume and open interest. The bid-ask spread is a penny. You cannot beat that with a stick. This is absolutely what you want to see when you want to get in and out of a trade. And half the time, if you're just not paying attention or you're just going really quick, or you're on your phone and you're like, you accidentally have buy call selected and you're just like, oh shit, I didn't mean to buy this this call that expires on Friday for, $100. If you realize that after you make the trade, you're only going to lose a penny getting back out of it. So it's no big deal. But for HUT, if you had to go down 10 cents on the premium to get into the trade, you realize you screwed up, and then you have to go up 10 cents to get out of it. You just lost $20 on a misclick. So, I mean, this is a penny, but it's times 100, so it's $1. But that's a heck of a lot better than $20. Assuming Amara is very similar. Thousands of open interest, thousands in volume. Bid-ask spread is under 5 cents, so that is not bad. Let's see if sometimes the even strikes are a little more popular. If there's twice as much volume and open interest, the ones that don't end in 50 cents. But the bid-ask spread is still the same, so it's probably not any harder to get in and out of these trades. For Mara, Tesla. And actually, contrary to my own advice, MicroStrategy does not have the greatest liquidity, but the amount of premium that you collect is so large. It doesn't bother me as much. And I, since I'm a believer in Bitcoin to begin with, and MicroStrategy is a leveraged Bitcoin play, I kind of just can't help myself. So let's look at Tesla. Tens of thousands of volume, 5,000 open interest. That spread is 10 cents, which is no big deal when the premium is this high. No big deal, in my opinion. Check MicroStrategy. So at the money, so there's like a $3, $2.30 bid-ask spread here. Now you probably, I think probably, I don't know how many people do this, but you don't want to go all the way down to 30.70. You can probably start with the mark price, and it might get filled, and then you can go down 10 cents or whatever, and probably get this filled at least for 31.50. So just go down by increments of 5 cents, 10 cents, whatever. Sometimes I'm just in a really big hurry. If I got other things to do, and I might just do 31.25, 31, whatever. But you can skim a few pennies here and there. And actually, sometimes Robinhood seems to do okay. Like, a lot of people talk shit about Robinhood, but sometimes I'll put in 31 and it'll give me 31.25. Like, it'll give me the best offer out there, which I never understood why this wasn't always the best offer. There must be some kind of market making computers in the background that are just maybe in real time constantly just matching people's buys and sells up. I don't really know how that stuff works, but MicroStrategy does not have the best liquidity, but when you're collecting 3,000 on a covered call, $1 is not that bad for me. And like I said, I'm expecting Bitcoin to pump with the halving, which is coming in March or April, and I am basically following the Plan B model, which has Bitcoin on 4-year cycles, 2-year bull, approximately 2-year bear markets, and according to the stock to flow model that he uses, and several other models too that seem to coincide fairly well, we've already started the beginning of the bull market, and approximately 18 months from the halving would be roughly when the bull market is estimated, if you follow this model. Not financial advice, and predictions are just for fun anyway. But so I'm trading all the mining stocks and MicroStrategy at least through this bull market to see what happens. All right, that's all I wanted to talk about today. Another short one. Be good, Joe.